So anyway, Clive Lambert, welcome to F.A.C.E. Great to meet you.
Hello there. How you doing?
Good, Clive. Nice to meet you. Did you want to share your screen so we could
Hey,
talk about a few
who did I go to
things?
school with?
Sorry,
What's
that
that?
was the British School of Paris. You weren't there, right?
I wasn't there. That's not me.
Okay, it's okay.
You're in London, right?
I am indeed. Yeah, well, Essex, near London. Yeah.
Okay. All right. So it's a little green box at the bottom for you to share your screen of someone.
Okay, let's do that.
And I'd like to start off with asking my guests a little bit about their journey. You look like a veteran. You've been around for a while, Clive. I read a little bit about you. You wrote a book on candlesticks, and that's your cup of tea that you teach and trade with. Tell us what your first gig was in the business and what you were doing prior to that.
Okay, yeah. I mean, I have been knocking around these markets since the late 80s. I was a stockbroker in those days, and then in 1990, I upped sticks for a year and went to live in Australia, where I got a job bizarrely on the futures market in Australia. And came back and worked on the London floor for 10 years, and that took us up till the end of 1990. So I was a broker on the live floor, silly jackets and all that business. And then then the floor closed in London, which was quite a while before Chicago. I set up the business writing analysis every day for traders, basically. Yeah, and you know, and the big markets back then on life were the Bund, you know, or in Europe, the Bund futures and the DAX. And so they were the things that I still write about the Bund today, you know.
We were fortunate to have trading floors to go to and have it be not only a place of employment, but a place of gathering wisdom from, you know, some of the best traders. I'm not saying everyone just because he had a seat was a great trader. A lot of people blew out, but you know, there was kind of a fraternity of traders, and you were getting a lot of information and learning different styles.
Absolutely.
Were you a technical trader then, or were you just trading the paper flow?
Well, so I'd never actually traded in the pits on life. I was a broker. All right. Broker, and I was a broker on the Euromarks, which was the short term, you know, and my journey was a little bit along the lines of I want to say something sensible to my clients each day, but the fundamentals to me and to quite a lot of people on the floor at times didn't really make, you know, we couldn't make head nor tail of it. The fundamentals, you know, the price would do the opposite to what the fundamentals suggested, if you like, you know. I think that was one of my light bulb moments, maybe sitting, sort of saying to one of the local traders, you know, one of the guys who's been around for years, that hang on a minute, that number's just come out, and it's you know, that's a bullish number, but the market's going down. And he said, well, the market doesn't want to go up, does it?
Yeah.
And then you suddenly think, you know, so does it matter? Why are we worrying about why things are going up and down? Let's just look at the price, basically. And that was sort of that start my journey, I'd say.
Did you notice stop hunts and audible roars from the floor when they would run them?
Yeah, absolutely. I mean, it's no coincidence that the amount of trade going through, you know, is even today called volume. You know, and that was, you could tell when something was going on the floors because the volume went up. And
right.
You know, I do remember one particular occasion when the volume only went up by a slight murmur. There was a surprise rate hike by the Bank of England at lunchtime, and volume only went up a little bit because everyone was over the pub. And it was when I very first started. And I was the one that ran over the pub and cleared a pub within 10 seconds with 2 words. I shouted out rate hike, and that was the pub empty within 5 seconds. I think that's one of the best moments of my life.
Okay, so I see we're looking at you know, almost everything kind of has a similar look. We're looking at the FTSE and mainly the FTSE here. So it doesn't look quite as bearish as U.S. markets. It's actually had relative strength to the U.S. You think that's because of cable weakness?
A little bit of that, I think, but not really. I mean, a lot of stocks in the FTSE are international stocks. There's a lot of energy stocks in there as well.
Okay, all right. So heavily, there's a heavier weighting of energy stocks because they used to be here in the U.S. and they dropped to like, I don't know, 10% of like the S&P.
Yeah,
from being like 30 during the bear markets.
Yeah, I mean the biggest stock in the FTSE is Shell. So you know, there's a and then we've got Shell and BP. They're pretty, fairly big oil and gas.
You do much in currencies or mainly stock indexes?
Well, my main speciality is commodities. To be honest, that's what my clients are. But I do. I mean, I look at, so what I've started doing in the last, I used to look at currencies, I used to look at all sorts of things, but and then the client base got very much stripped back to commodity people in the oil and gas and energy base. But and that's almost coming a little bit full circle now. I've started looking at Forex again because those clients want to know, they've got Forex exposure that they want to talk about,
So what are you thinking here on the euro? We go for the 103 level first, or could we be turning here?
Yeah, I mean, there's a huge amount of support in euro, US dollar. It's something I pointed out to my clients this morning on my morning note. If you look at it, I've just stuck some orange horizontal lines on the chart. For me, the simpler the better, And
I believe that.
There's a low there, a low there, there's a low, and there's a low, and I've got an orange line on each one, and that says 103.50 to 105.50 is an enormous area of support, and we're there. So it's going to be interesting times to see what goes on with that one in the coming weeks. Really, I mean that's a monthly chart showing there. If we look at the weekly, I don't know. All we've got on the weekly is a doji last week and a little bit of downside rejection today so far. Daily chart is just a bit messy, to be honest,
So way overdue.
Before that's reversing, but we are at support.
Okay, MACD important to you? You have it up on the chart?
MACD, yes. I mean, there we go. We've got a negative MACD on the daily. It's one of the things I do look at for confirmation. It's bearish weekly, and I'm sure it's bearish on the monthly. Yeah, it's bearish on all those time frames.
So I noticed you had you in chat, you put your 61.8 target on silver. Can we take a look there? I mean, silver's been outperforming. Gold silver ratio's been on a tear. Do you use the gold silver ratio for timing?
I don't, to be
silver
honest.
Entries?
No, most of my clients trade in the individual products, and so I tend to take an attitude of I will just analyze each chart on a standalone basis and leave any comparisons and things like that to the clients. That's the way I've sort of set.
You're better off. Correlations work till they break down.
Well, yeah, I mean that's right, absolutely. Risk on, risk off isn't working too well at the moment, is it? When you've got bonds and equities all and gold and silver and everything, it all seems to be going south. It's like, well, where's your risk on, risk off type of how's that getting on?
Yeah. So, do you think that if we get down there, is that a place you would probe the long side?
Yeah, I mean, you've got this. I mean, we've got support there: 21.80, 21.40, 21.41 again. But
don't you think they have to take those stops out first, Clive?
Definitely. I mean, it's not lost on me that your Twitter handle is Forex Stop Hunter, yeah.
And sometimes I'm Forex Guest Hunter when I have to go hunt them down before the interview. But and it was because I was on the floor too, and I actually ran orders and remember when I would hand an order into, cattle pit or the gold pit, the brokers were always really interested and put in, a different slot in their fingers where the stops were.
I bet they were. Yeah, absolutely.
And then I noticed the audible roar and sometimes saw that being at least a short-term turning point. So that's just something I noticed when I was a young man, 22.
Yeah.
Yeah, when
I
I
mean,
was trading with Jesse Livermore.
Yeah.
I'm just kidding.
You're not that. You're not that old.
not yet, hopefully.
What a great book though.
Yeah. So commodities,
So
do you
I mean,
cover the
silver,
grains?
as you said, silver's got a very obvious support there. So
Yeah.
got to think that that's going to be given a test, and then we can head down. For me, Fibonacci.
Yeah.
Fibonacci lines up nicely with things, then I like it, and you've got a fib level there at 1879, and you've got three highs there at 1889, 1892, 1895. So you can draw an ellipse or anything you want. You can say, look, there's your support right there.
Right. Yeah, I like that.
Saucer. Then
what's your look in gold, Clive? In comparison, it's been holding up much better. Where would you look at longs there?
I've got an area here around 1830. If that breaks, then we go to 1730 and maybe even back to here 1670. But that uptrend line is doing the job at the moment, so we'll see what happens there.
Okay, how about the breakout line that it came out of? Where would that come in? Around 1800?
Yeah,
that triangle line you have on the gold. Yeah, there.
Yeah, 1816 is the broken up downtrend. Yeah, so it's all in a ballpark there, isn't it?
So were you able to participate in the ag rally? In anything that grows has become a beanstalk, like Jack?
Yeah, do you know what? I haven't looked at these charts for a while. I don't even know.
They've been leading the way for the inflation part of the equation. And I'm wondering what you think about all central banks thinking they can control inflation when they can't print grains.
I know, right?
So I mean, how even if we're at a 10% rate and they crush everything else, do you think that would have an effect on wheat and corn and sugar and coffee and cotton and natural gas?
No,
maybe.
Probably not. No, I'm detecting your thinking, and I'm agreeing with you. We've got some sort of and yeah, I mean, these charts do look a lot of the charts, and they look a bit like some of the metals charts as well. Some of the base metals, things like copper and tin. They are starting to look like they're turning over now.
Yeah, copper's had a pretty good pullback.
Yeah, I mean, I was looking at tin today, I think. But maybe it's on.
Were you on the exchange that had the problem with the tin?
No,
the nickel.
That's the metals exchange. That's the right old mess, isn't it? Yeah.
Yeah. Ever hear? I mean, in my career, I never heard of trades getting canceled like that.
No, I know, and it was it's quite dramatic, to be honest, what's gone on there, and quite messy. Yeah, it was a nickel. It was actually recently it was nickel that was the.
I like your charts, Clive, and your descriptions are perfect for people that don't have a lot of time to get the whole gist. You get right to the bottom line of this stuff. So
yeah, I think it's important to. I think a chart should be helpful rather than a hindrance. I think quite often you see charts with a load of stuff and information on there, and it can really paralysis by analysis kind of thing, whereas I prefer to try and sort of pick out the 3 or 4 important things and then just highlight them and try and keep it simple, basically.
Okay. I noticed, I believe it was when I was going through your Twitter feed, is Futures Tech has an association with a bigger outfit. Do you know what I'm talking about?
You mean the Society of Technical Analysts?
That could be it, or some huge broker or somebody.
No, that's not. No, I'm not involved with the broker. I used to have there was a broker in London here that used to send out some of my analysis to their clients.
Okay. All right.
Years back.
I just wanted to get a clear picture on your business model.
I
Go
am. I am on the. I used to be on the. Just left actually the board of the UK Society of Technical Analysts. So we, you know,
Okay.
that's maybe what I thought you were looking at.
Yeah. Well, Elon Musk hired you away to go on the Twitter board for him.
I just
So,
rest.
so here we are, Clive, going into the end of spring. Summer's about a month or so off. What is your biggest takeaway with what's happening in the markets? Are we breaking down in, someone said, cricket season? Are we breaking down? The S&P is going to break down under 4,100 and maybe decline another 10-20%. That 41 number is pretty.
This weekly chart for the S&P's got an area here at 38,
Okay.
38.30. There's two Fibonacci levels right around the same area.
And that's a 38% retrace on that too.
38% of March 20 to January. And then the last leg of that was from October 20. And the 61.8 of that comes in at similar levels. So for me, but this is breaking down for sure. Is it head and shoulders? I heard the guys discussing this earlier. If it is, that's the neckline. Okay, because the head and shoulders has a very clear set of rules. 3 highs. The middle one's the highest. So this is your shoulder. There's your head. There's your shoulder. I see so many people drawing head and shoulders necklines wrong. But the rules are very simple. And yes, it can be down sloping. There is the neckline. We're still above it as of right now. Okay.
So it could be a wedge line. It could turn into a wedge if it holds here.
Yeah, I guess so. I mean, I think
because you could draw a line off the top 2 highs, and with that line you have at the bottom, it'll look kind of like a wedge, or see, got that little wedge look to it. Okay, so I didn't know. I always thought that the best necklines to have were either horizontal or upsloping. But this. You're saying this is valid, this kind of line?
Yeah.
Okay. All right. Okay. So I don't know. We don't.
And if that was to break, you've got a target, measured move target of 34.6.
Yeah. There's some weekly moving averages down there too. 200, I think, is down there.
Yeah. Okay. Yeah.
And I think that's pretty close to the COVID high before we crashed.
There. Yeah. Okay. So look, you've got this is what you're talking about. This is 200.
A lot of confluence there.
34.70. You've got the Feb 20 high at 3,400. You've got the August. It's some shenanigans going on around there at that time, wasn't there?
Okay. So a lot of things point towards that could happen. I still know guys that are looking for new highs, and they're not dumb guys. They're pretty, they called this correction. They thought it was going to end and we'd get one more hurrah.
Yeah, I didn't. I was quite surprised. I thought last week when we retook 4,200 or 4,203.5 to be precise in the futures.
After the Fed. Yeah.
After the Fed, I thought, okay, well, there we go. We've done exactly what we did in February and March. We've rescued this key short fib. Okay, and you know what? I was pretty bloody bullish last Thursday.
Monday.
Got smacked. Thursday and Friday, absolutely mangled, Yeah,
you've been around for a while. Have you found it very difficult to position trade almost anything, and that you're better off taking it when you have it?
Not anything, because there are certain markets that have behaved really, really, really nicely. I mean, I think, you've got some
trends
in things like bunds, and also oil's been pretty well behaved most of the time. Gas markets are,
huge move. Huge move in that gas.
So you have to be selective, I think. But equities have been difficult, but this is a question I actually asked on one of my reports today. Volatility like this is the kind of thing you see at major tops.
Right. The back and forth churning.
Yeah.
Oh yeah. I heard an expression once. It goes like this, is that markets bottom in silence and top with violence.
Yeah.
You could use it if you ever want to. $10 every time you use it.
I'm writing that down right now.
I know you are. Nothing I have is original anyway, Clive. So, you know, really a pleasure meeting you. You want to show people where they could find you? I know your Twitter handle is @FuturesTech.
Yeah, I've got a website, FuturesTech. It's got an S in the middle. And
That text, yes, okay.
That's what the website looks like. Got some nice little windmills on there.
One of our traders, I saw her Skype, says that you have friends in common. Amanda Sweeney.
Yeah. Yes, I do know.
Okay, because Amanda's an amazing trader.
Yeah. Yep.
Yeah. So
There's
your website. If you want to look at some clean stuff and have perspective from what Clive has seen, I could tell he's a veteran and keeps it simple. You know how to find him. You survived this interview, buddy. You're now my trading warrior brother, and maybe you'd like to come back down the road.
Excellent. It's been a pleasure. Thanks very much.
All right, Clive Lambert, everybody, @FutureTech.
Yeah.
All right, and good hunting, Clive, and keep in touch. I'm glad our paths crossed on. Let's thank Twitter for, met a lot of people because of Twitter.
Yeah, it's a good place for that.
All right, buddy. Good luck this week, and I'll get a hold of you later on in the day, and we'll set up another day.
Okay, sir. Excellent. Nice to speak to you.
All right. And now remember, everyone, I know you saw some great technical work between the team and Clive, but don't just count your pips, count your blessings. And I'll see everyone tomorrow for Turnaround Tuesday. We join the team in 19 minutes for the morning edge. Adios. Take it easy, everyone. See you, Clive.
Cheers. Take care. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.